Okay, welcome those of you on Zoom. We've launched it. That's where the recording is. One more week. That's what I'm setting. 1 week. We're going to do a simultaneous broadcast between Discord and Zoom for one more week. Good morning, Michael. Good to see you. In order for us to make the transition, there's still a couple of bugs I'm working out on the Discord side. And so this will give you all a chance to transition over to Discord and get comfortable with it. It's those who are already there are very, very helpful. Um and can help walk through. But I will continue to Michael said I will forget for sure. I will continue to remind you. This week, we will continue making the transition. So just expect a couple hiccups. I'm going to continue troubleshooting and making sure that I get all the kinks worked out. And then we're going to stop. We're going to stop Zoom. No more links. All you got to do is just pop into Discord and you're ready to work. Okay. Let's see. Most people are telling me sound, but Phil is saying no. Okay, are we ready to go? Yes. Sorry. I had to get the Zoom going, and apparently it had muted me. Uh yeah, Perry, what email did you send to? Uh I haven't seen something come through. Are you guys hearing me now? Great. All right. So here's what I was saying to those on the Zoom. One more week. This week is our final transition week. And then we are only on Discord. So if you happen to pop in through Zoom, I'm still going to troubleshoot the Discord entry to figure out why it's playing music and you can't hear me. I'm turning music off and on. There's something in the settings I haven't found. I've Googled it. I've chat GPT'd it. I may just have to reach out to them and find out. So I'm making some final troubleshootings on my end. Make sure on your end that you've noted that this is it. We're sunsetting. We're sunsetting Zoom completely. Greg says trying to get on, forgot the password. No problem. You got a week. You got a week. I've got a couple of bugs to work out. So all right, and I'll go back through and go from there. Phil says general market watch support email hello@themarketwatchgroup.com. I'll go check, Perry. Maybe I didn't see anything, but maybe it got picked up in a spam folder for some reason. I'll look. But yeah, I'll definitely respond. Where will we find recordings after we sunset Zoom? Okay, so remember that all the recordings are posted into our YouTube channel, and I will continue to get the links and send them out directly to you via email. So you should receive an email from me after every meeting with just like a quick highlight and then the link. So if you ever don't make it to a meeting, you can be like, oh, okay, what was covered? What did they do today? And you can see, here's what we did. Here's what the market's doing. Here's the link to watch the video. Or you can just go directly into the YouTube channel and you can find everything that I've linked to in the everything that I have linked to in the content and the resources, the content library. That's all on the YouTube channel. So you could go just dig around. I have it just sort of organized by topics and linked that way. So it's just kind of an organization structure to get into that. So you can always find it in there. Love it. Perry or Steven said he just posted his market posture. So a couple of things, right? we are trying to not just use Discord for the stage and me giving presentations, allowing you to interact with me and you to interact with each other. We're increasing all interaction. So we have text channels, and we're going to do things like discuss strategies, trading plans, market conditions, etc. We have voice channels where you can meet up for the member interactive sessions. We even are going to have a junkies channel where those who are just always popping on to see who's there have a place to meet up with somebody. So whether you're leaving a message, whether you're coming to interact, whether you want to interact via text, whether you want to go live, share screens, meet each other, it's all available. So it's we're getting great feedback. Bob says he's very pleased with it. Sandy says she's loved it. Stephen has loved it. Is the stock option on Discord? Everything. We're transitioning everything over. So the Tuesday night, you mean Tuesday, Thursdays? That's going to be on Discord. This week, it's still going to be Zoom as well. But once we get to the end of this week, we're going to only be on Zoom. So I'm going to continue to send some special emails regarding that. Make sure if anyone has any issues, they can let us know. But like I said, there's a lot of support even on the channel to get help. So all right, yeah, good stuff, right? I as we said, we know there's going to be just a little bit of friction. It's a new feature. It's a new platform. We're all kind of transitioning over. So to some extent, we're all learning together. But we will really turn that into a community asset. You're going to find a lot of value in your ability to find support, interact. Yeah, we had time issues. If you happen to live on the other side of the planet and your daylight savings is 2 weeks off from ours, it creates havoc. I told Sandy it's created havoc for me since I started coaching, dealing right, and now it's automated. It's all process. So it's a better environment for us. So there you go. We got events. We've got the calendar. Awesome. Anyways, all right. Okay, so officially, welcome to the Market Watch Group Weekly Market Prep. My name is Scott. I will be your host. Here are our disclaimers. As always, remember, this is educational, illustrative purposes only. We're not advisors. We're not brokers. We don't give guidance. We don't give recommendation. If you want to read these in detail, they're always in your emails. Our agenda, as always, market posture. Steven said he posted his. He said he was pretty tough. Look, here's the deal. We're gonna talk about this, especially now. The philosophy behind market posture that we do is oriented to stay more bullish, because that's how markets are. They tend to stay more bullish. If you look at like the percentage of time that we're in a bull market versus a bear market versus a neutral market. But we tend to get more negative. It's a very, very interesting thing. I felt it early in my trade. It's gonna drop. It's gonna do this, and just keeps going up, keeps going up. Oh, we're due for a correction. Keeps that statement right there. That it's due for. If you ever say those words, that is the essence of gambler's fallacy in dictation, right? We're due for. What does that mean? You're due for something. Like the market owes it, or it's like, and where does that come from? If I flip a quarter 5 times in a row, comes up heads, comes up heads, comes up heads, comes up heads, comes up heads. And I said, all right, what's next? What are you gonna say? If I had a group of 100 people and I said, okay, in that scenario, heads or tails next, do you think that the distribution in the audience would be 50 people said heads and 50 people said tails? Right? Do you think that they would randomly, or do you think that they would be biased by those first five? I said, oh, we just had 5 in a row, they were all heads. Or maybe they saw that. I mean, right? So let's just say that. I said, oh, we just had 5 in a row, they're all heads. What are you gonna bet? I would imagine, I want to do this because this is a great representation of it. Steven says he believed there would be bias. Bob says the next is 50-50, which is exactly right statistically. Now, if I were to say, what are the odds of getting 6 heads in a row? Well, now I have to take 0.5 times 0.5 times 0.5 times, right? And I have to extrapolate that out, and it's obviously there. But if I've already got 5, if those 5 already happened, what are the odds of the next event? 50-50. So, but when you say, oh, we've had 5 heads in a row, we're due for a loss. You see it in, roulette, right? The whole red, we're due for black. And so, and this whole due for thought process is gambler's fallacy. But if you watch CNBC, you're going to watch people say, oh, the market's due for blah, 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 whatever it is. And you're like, instantly, you should discount that. Does that make sense? Right? Like we should that's not analysis. We're due for something like, whoa, it's like, no, let's trade what we see. And that's the point. So when each needs to be treated separately as exactly right. Now, if I'm looking at the potential for an event at the start, if I say, what are the odds that I have 5 losing trades in a row from now? That's different, right? If I say I've just had 5 losing trades, what are the odds that I have a winner or a loser on the next event? That next event is mutually exclusive and independent. Those are 2 phrases. And I tell you, I probably interchangeably use them wrong. I've had a statistician correct me. He's like, no, it's independent of. And I'm like, oh, okay. I don't remember. Mutually exclusive, like exactly, right? One does not impact the other. So, okay. Now, what does that have to do with the markets? When we forecast, we never allow something like, well, we're due for this now. It's been bullish a while, we're due for. No. What do you see? What do you see in our trends? What do we see? So if you say you were harsh, it's because you saw some things that looked harsh. My expectation today, my expectation today is that we will drop again. But here's the thing. We do have to understand to some extent that the market is influenced by gambler's fallacy. The fact that we recognize how pervasive it is, the fact that we turn on CNBC and hear people discussing it, right? To us, that means we recognize it is pervasive in the markets, and it will influence the herd as it moves. What we're saying is we will not succumb and make mistakes based on that, but we will recognize things like, oh, okay, what's next? So right now, our posture is bullish still. It will be, but it will have come down for the 3rd straight week. And we've now reached a tipping point where we're saying to ourselves, this is now not these little corrections that we've had. Lost audio. Discord, can you hear me? Is it one person or have I lost audio completely? I can hear. Okay. This is the beauty of it. when I only have, when no one else can see and I say something like that, the person who can't hear doesn't know it's them. But now they can see other people say, oh, yeah, I can still hear. So they know, oh, yeah, okay, I need to work on it on my end. And it makes it so much easier for me to know that it's not on my end. I'm telling you, it's a better place. We're going to all be happy here. So, Gambler's Fallacy. You remember I told you, I think I told you the story when I couldn't sleep in Las Vegas. And I asked the roulette dealer when I was watching the table, just kind of as a spectator, how many times he's seen red or black in a row. And he told me of a guy who said he had seen it. It was like in the low 30s, 32. The odds of 32 in a row are really, really not good. 32 in a row of one color or without the other. But then think how many roulette wheels are spinning 24 hours a day in how many casinos in Las Vegas, just Las Vegas, right? How many times do they spin it? And so you're going to see some things, right? You're going to see some things in probabilities that you're just, and these runs, they call them, right? These runs where that's where the gambler's fallacy can hurt you. And as traders, we want to capitalize on runs, not find ourselves getting hurt because we're trying to go the other way. Like, oh, it's due for. Okay. Let's dive into it. We got to get cracking here. I've been yapping too much already. I don't have Steven's input in. I've told you how cool it is. It is cool. We will have it soon. I just have to make this Discord transition. So that's been obviously my priority. Okay. Long-term trend. Let's get started. I mean, we're going to talk about it, but we know we've already said this thing can start pulling back like it has. Oh, am I disconnected? Come on. When it rains, it pours. Give me 1 second here. We're not gonna get too derailed because we have other things. Oh man, nothing is working today for me. I think I need to do a reset or something on this end. Okay. Let's take a quick peek at a couple of other things while my platform resets. I don't know why it happens so often on Sundays, you know? Oh, close automatically. Sorry. I was like, what is going on? Let's take a look real quickly at a couple of things coming up. What's going on? Oof, you guys saw NVIDIA got crushed. Crushed. What do we have coming up this week? So the market's finished in an interesting place. Let's look at the economic calendar while this thing hopefully lets me back in. Okay, what do we have? Nothing on Monday. Nothing really on Tuesday. Nothing really on Wednesday. So what is happening on Monday and Tuesday and Wednesday? Earnings. We are well into earnings season. So we have no economic news. We have earnings. Then on Thursday, we have GDP. We are expected. So remember what we said we're hoping for? Ideal conditions. Inflation in the 2s, hopefully closer to, I feel like this is stalled here. It did. Sorry, my Thinkorswim stalled. I have to restart it again. My computer is apparently in weekend mode. Get a new computer. The computer's good. Uh, just needs need a little tender love and reset. All right. Let's get those updates cracking here. The other stuff, I don't have charts. There we go. All right. Live trading. And let me get this in here. Okay. So we do have, so remember, oh, sorry, here's where we were. Ideal inflation. I mean, the Fed says 2, but if you go back and you look at a 20-year, 25, 30-year average at various intervals, you're going to find it somewhere at lowest like 2.35, 2.7. I'd say on average 2.5. So let's say inflation, the true target when they're really like, okay, now we're going to get our hands off is closer to 2.5. So we want growth at 3% or higher, GDP 3 or higher, inflation at or below 2.5. If we can get that little margin where growth outpaces inflation, we are in an ideal spot economically. That's like what we're constantly kind of working towards. Okay, here we go. And let's get cracking. But since we're here, we're going to finish the economic calendar. Yeah, we do have the Fed, one of the Fed's favorite inflationary reports on Friday, PCE. We have spending, income. So income is expected to tick up. That's good. Spending is expected to tick down. That's good. Right? We want people to make more money, but we want them to spend less because spending less does what? Eases inflation. So we definitely want spending growing, but less so. And then we would like to see, here's PCE year over year. They're expecting it to tick up a little bit. We'd really like to see it ticking down. Core is expected to tick down. But PCE itself, yeah, we really would like to see that have an unexpected surprise to the downside. Everything about what we're looking at right now is about these inflationary numbers. A quick peek at our interest rate expectations. Again, May and June, there's just really no expectation. What is PCE is the question. PCE, and now I'm blinking. Give me just a second here. Is one of the Fed's favorite inflationary measures. It is the personal consumption expenditures. I couldn't remember the last one. Personal consumption expenditures. So it measures goods and services consumed at the consumer level, right? That's what makes the Fed like it, is that it's at the individual and household level that it's being measured. So this is one of the Fed's favorite expectations of inflation. Okay. July. How does the Fed get the info, or how does the I believe it's Bureau of Economic Research or Bureau of Economic Analysis. How do they calculate it? That's a great question. I don't know the exact mechanisms that they're using. Certainly Google and or ChatGPT will help you with that, but I'm not exactly sure. Good question. Okay. In June, we're almost 2-1 against. you can see that even in July, we're barely holding on to better than 1-to-1 probability of 1-to-1 probability of a cut, even in July, or excuse me, September. So there you go. Look at how fast Sandy is. She's like she'll just pop it in there. Do all retail report their, like, do all retail stores? I'm not sure. See, this one is actually not based on retailers. This is based on expenditures of households. So I'm assuming what they do is they create a sample representation. I don't know, 10,000 households, something like that. And they basically track those households as a representation. Then, like I said, you could go look it up. I have no idea the exact mechanisms behind that. So many different economic reports, right? I tend to really focus more on the impact, more so than, I guess, research methodology. Okay. SPY. It's accelerated on the weekly for sure, right? We can see that it's accelerated. We can see even just in a quick look, this is worse than what we saw back here. The volume accelerated, the candle accelerated. However, even that alone doesn't mean that I'm like, oh, that's it. We're done for here. I'm expecting, as we get closer to, remember, we've got two different lower trend lines. Two. We have one here. And when we were in that level, we were scoring this like a 1.25. So if this thing like meanders all the way back down to here, yeah, that's pretty big. This was 10%, remember, right back here. So I think that this drop to here would be worse. That looks more like 15%. That's not a bear market. That would be what I would consider a deep correction. This first one back here that was 10%, that's a correction. If we went all the way back, that would be deep. If it only went back to, let's say, this line, that is about 10%. I should have drawn this closer. That's there. This is about 10. So we have this red line. In this red line, we scored the market a 1.5. Those are both the bottoms of bullish trends that we had already identified. The fact that we're pulling back does not change our long-term posture. It's a pullback, whether it is a consolidation, 3 to 5%, a correction, 10%, a deep correction, 15%, or does it end up being full bear market? So from this perspective, where would bear market be? 524.61 times 0.8, which is a 20% decline, 420. We would not call this a bear market until it dropped all the way down back to there. And that is actually still a little higher than that, to be fair. But no, at that point, we would definitely say, okay, bearish. So it's important for us to have this long-term perspective, right? And see what's going on through this. Oh, look at Bob. Bob says, I see your definition of PCE and I raise you data collection. That's what I mean. Look at how we bring it in the Discord. Love it. Good stuff. The red line, was the red line 1.25? That could be true. That could be true, Bob. Red line could be 1.25 and the black line is a 1. Either way, they're still bullish numbers out of 2, right? Okay. So what this does, though, it helps us kind of have a sense of like, hey, what's the capacity here as this thing drops? If it does this, or this, what would that mean to us, right? And remember that this one is all the way down here at 20. What am I going to do for scoring on this right now? Absolutely nothing. Absolutely nothing. Because could we just stabilize right here and then recover and then take off? Sure. Could we meander sideways for a while? Steven said, watch the Fed miraculously reduce the rate in September during the political year. Yeah, I mean, I get what you're saying. But they've been talking about September. I don't think they will. If the inflation, here's where you can have if they do it in September, but inflation has come down further, that's what they said they're going to do. They've been transparent. If inflation ticks back up and then they do it anyways, then you have an argument, right? Then you can say, hey, that feels political. But they've been transparent as hell. And I'll tell you what, like the Fed absolutely rescued the market and the economy during the pandemic, right? Like straight up, like they gave us a 6-week bear market and things just turned around and the stock market recovered. And I mean, the market took much longer, obviously, but anyways. Okay. Well, I think we went to 1.5. Bob said, haven't we been using the black lines for at 1.5? I think we went to 1.5 when we kind of busted the top side of this red line back in this area here. If you see that, and I think that's when we did it. So I don't know. If you're starting to drop yours back a quarter point, I could see that. I could see that. Okay, I'm going to have to speed up because it's 9:34. I've got to go a little faster here. My score is still at a 1.5. You know what? Actually, I think I am. Well, no, let's give it one more time. Here's what I'm thinking is it's kind of sitting on this black line here. If it eases back, that is the one. That's the 1.25 line. So I think as soon as this is convincingly not holding, but we're still kind of there. I'm going to give it one more week. But I am thinking like if we get to the underside, then in this area, I'm going to ease back to 1.25. And if it can't hold this line, then I'm going to ease back to a 1. That's my thought here. Thoughts? Michael's already going 1.25. My thought was if we hold this, this would indicate that this was right? So my thought, yeah, okay. I'm going to give it one more week. I'm going to one more week. These steep black lines here, these are the short-term lines that have been broken. Okay, I'm going to stay at 1.25 or at 1.5. I could certainly understand if you go 1.25. Let's pop down to the short term. It's got to drop. The question is how much, right? We were here, we scored it down. No, we were here and we scored it down. Why are short-term lines on the long-term chart? They all show up. You'll notice here's those red lines. Here's those black lines. So the long-term lines show up on the short-term chart and the short-term lines show up on the long-term. I actually like it, to be fair. I like that. I'm like, oh, where are we relative? So we're like right at this line and we're thinking, is it going to come down to this line? This line's the 1.25 line. So if it stabilizes above, it might still happen. Let's go back 5 days. What happened? We were here. We're at a lower low. This is definitely dropping, right? The question is how much? Is it dropping by a quarter or by a half? That's the question here. And for me, I think I am going to take it down a half. We broke the 50 and we have a lower low. So that's kind of two things that happened. Broke the 50, lower low. I'm taking mine down to a 1. Give me your thoughts. Steven, you said you were harsh. What did you do? Bob agrees. Sandy's a 1. Yeah, I think we have to knock it a half. That was a pretty nasty two achievements for sellers, breaking the 50 and making a lower low. Okay, let's go to volume. I know I've got to go a little faster. I get to yapping. Let's go down to a 1 month daily chart. Yeah, the volume is, again, we were a 0. Remember that. There's really not a lot of good days on here right now. This is a wash. It didn't drop far enough. This is the buyers. This is a wash. But you'll notice that the back half of this chart, let me just, I'm going to use arrows. Let's draw arrows. Okay, so I'm going to say that goes to nobody. Wash, buyers, wash, and that's it. I don't see, maybe there's one more for the buyers. Maybe, I don't see any. Sellers. Sellers, right? It's a white candle, but it went from there to there. That's down. That's a drop. That's sellers. And then it tried to go up, and then the sellers came, and then the sellers came, and then the sellers came. I mean, that's really kind of a nasty little bout of sellers right there, right? So it's like realistically, this cancels itself out, and we're left with 4 days. Over here, we're 1-1. That's kind of stale. 1-1 on one side, 0 for 4 on the other. Yeah, I think you could drop this a half a point. I'm not going to overreact. This is going negative. I'm going to go to a minus 0.25. If you were like Steven said, he was harsh. If he said I went minus 0.5, I'd be like, okay. Okay. Michael did. Michael said he's a negative 0.5. You're not going to hear me argue. I get it. You know that I'm just kind of keeping myself a little tempered. I went a half a point here, quarter point here. You can see it's already kind of nasty. So, like I said, this is going to be one of those areas where we're positive. We're positive, but we're absolutely looking more for trades the other way, like much less inclined bullishly, much more inclined bearishly. I'm gonna go before we even finish. I'm gonna come back here, and you can see we had a similar type of a situation here. Now, a little reminder. It can give us where like a little ray of hope. Boom, boom, boom. Right there in August, September, it was like it looked like it, and then it fell again real quickly and hard for October. So we were pretty tempered then, but we're seeing something very similar going on now. Let's go finish this thing. Major market. So what do we do in harder markets? Work on our trading plans. We take less risk, man, right? Yeah, we take less risk. We work on our trading plans. We put on things like calendars, butterflies, and iron condors. Anybody know how to do those better? If not, that's because you didn't come. We had class on that. You should have been there. It was amazing. Also, we recorded it, so come take a look at that. I just like distracted myself. What did I say we were doing next? Oh yeah, no, I did need to go there. I'm like, why am I going to this? I'm going here. Major market. Okay, what are we seeing? Even here, look at this decline. Bam, look at this Dow holding and starting to turn. You see that? You see it? This one was down. Can't do it. You can always reapply. Especially if you've moved to Schwab. remember that you have to really be, to some extent, fairly aggressive in your answers on your options forms. If you say to them, "Oh, I'm very conservative and I don't want to take a lot of risks," they're like, "Oh, then you have no business trading options." Right? If you tell them that your time frame is short term, they're like, "Yeah, then you shouldn't be trading options." Why? You're thinking, "Wait, options are short term." No, no, no. They're thinking about it in terms of your ability to recover from losses. So if it's like almost like they try to trick you, but it's essentially their CYA. When you do those options agreements, it's so you can't come back and sue them and be like, "Well, you shouldn't have." It's like when you sue McDonald's and they're like, "Well, you should have known the coffee was hot," right? You have to have an agreement on file with McDonald's that acknowledges you understand coffee is hot. That's what you're doing. You have a agreement on file with the options broker that says, "I get that it's, so if they haven't given you, but day trading is different than spreads, right? Day trading is different than spreads. Day trading either requires 25K or there's like a cash settlement exception if you're trading in a cash account and not, but if you're trading in a cash account, you can't do spreads. So you can do day trading without spreads. Or you need to get a margin approval at a level 3 in order to do these spreads. And that's about the option agreement. So those two are different animals that are independent of each other. You can get approved for spreads without an ability to day trade. I'll tell you that. Sub 25K can definitely be approved for spreads, 100%. Okay, so let's move through this. And you can see what's happening here. Look at that. Look at that red line has now crossed below. So it's just been in the last week that we're really seeing this thing deteriorate. It crossed below the NASDAQ crossed below the S&P. The Dow has crossed above the Russell. We're just kind of seeing this defensive shift occurring here. Let's go to 66 days. Yeah, this score is dropping. This score is dropping. You can see here that the NASDAQ has really shown a significant increase in its weakness. So now here's the deal. At the end of all of this, the Dow is still at the bottom at our scoring chart. We're seeing shifts, but at our scoring chart, the Dow is still down here. The Russell's made a pretty steep drop. NASDAQ's made a pretty steep drop. Yeah, I'm dropping at least to 0.5, but when we get to this point, still ahead. Yeah, I mean, it's very interesting. There's been a shift that is less bullish for sure, but we don't have the Dow popping above. Do we have it here? There's the first time that it's popped above. I mean, I knew I was going to drop it, right? I knew I was going to drop it. This is just the last 22 days. We don't want this to be too influential in forming our score. This is not how we score it. This is how we break ties, right? Remember, the 22-day is how we break ties. So if you were on the fence here, if you were like, you know what, I'm not sure if I'm going to lower this or not, and then you went here, you'd be like, yeah, I'm going to. But I already knew I was going to lower it here. If I said, I'm lowering it 1/4 point, should it go 1/2 point? Then you could come down. And I would say again that's valid. That's valid. If you went, I think you could drop this 1/2, but I don't think we want to overreact. Remember that there's always some measure of subjectivity. I definitely went with the 1/2 point here. I think that the volume was 1/4. I think that the major market, if it was worse on the 66-day, I'd score it a half. And if it gets worse, I'll score it down again next week. We'll see what happens. Okay. This will be an interesting one to see where we all end up, right? To see where we all end up. I'm super curious. Let's go to sector rotation. Yeah, see, I thought it might go 3/4 of a point, but it's even worse than that right now. Is this updated? Let me make sure. Communication services still hanging on at the top. Energy's popped to the top. Financial still, right? We can see that technology's had a significant decline. Industrials are still hanging on in a leading position. What do we have down here? Discretionary getting beat up. Staples isn't doing great. So one of the things we're asking ourselves is, do we think that we're going to see a defensive shift as we move through here? Financials actually is like, hey, we're doing okay. Don't count us out yet. Comm services coming down. Technology is really concerning right now, right? Then you've got what? Bob said, hold on, look at utilities turning. That's a little defensive looking. I agree. Staples, I mean, Staples is way down here. I don't think it looks that much, but discretionary certainly looks weak. A lot of weakness in discretionary and technology right now, right? Strength and energy, we don't love that. That's inflationary. That's inflationary, but not defensive. We're wondering if we're going to see defensiveness. We still have communication services on top. We still have industrials on top. We have financials. Those are all three good growth sectors still. We have materials, which is a little inflationary, but it's pulled back. You can see what's really showing the worst amount of momentum: discretionary and technology. So if we decide, hey, you know what, Scott, I'm thinking about being more bearish. A lot of people think, oh, let's go find weak sectors, and they think, oh, let's go find we don't want weak. We want just recently strong. I want it's financials, or excuse me, it's discretionary. It's just right. Where's the selling pressure right now? Technology and discretionary. If I'm thinking to myself that I'm going to go try to catch some things dropping, if this market's going to correct, I want to go where I see things dropping the fastest. We haven't had conversations like this for a while, right? But these are the right conversations. So where's money falling the fastest? Technology and discretionary. These are things that have broken their 50-day moving averages now. And that if they come to the back up to the underside, yeah, we've got opportunity there for downside trades. I'm just saying, let's just be water, my friends. Okay, so are we scoring it lower? Yeah, probably. I mean, I would actually still say this looks bullish. It's still more bullish than not. It looks inflationary with bullishness with some inflationary pressures and a hint of defensiveness. I wouldn't actually worry about Staples, but that's a decent jump right there on utilities. Overall, still looks more bullish. 22. What do we have? Now here's where you have energy and utilities. So there's a flag, definitely a flag. Still bullish, but I am going to drop it to 0.25. When technology falls out, it's hard. Three strong sectors have a hard time when technology is not participating. So I am 0.25 on sector. I'm too conservative. Both 0.2. Well, I did drop them both 0.25. Are you saying they both should have dropped 2.25? Okay. Now, this is good. This feels right. This feels right. And now the VIX. I actually thought the VIX might stay the same because we had already scored. What happened? Let's see what's happening now. So what's hard is this, is we started up there, but we were literally back under this in minutes. Actually, it doesn't even look like see, I don't think we actually did. That looks like a chart. You'll notice we don't have any showing up there. There's a bad print. That's a bad print. It was never actually up here during market hours. The highest we never got above like 19, 15. So that's misreading right there. We never got above. We scored. Did we score a higher high? 1, 2, 3, 4, 5 days. No, we do have to score a higher high. That's a higher high still, don't we? 0.5. Okay, I'm going down to 0.5 for the higher high. Now, is that VIX? Remember, we're still below 20. With everything that's come in, we're still below 20. I hope they get that fixed because that's a misleading candle right there. That was more than I thought it was going to be. What did you guys think? Where did you end up? What did you think and where did you end up? Steven said he's the 0.25 difference. Okay. And here's the thing, right? There may be times where I'm harsher on short term and lighter on volume, and you're the opposite, but we end up in the same place, right? But we end up in the same place. Where are we? We're still slightly bullish. We're hanging on to bullish. If the market can salvage, if the market can stabilize from here, we can regain bullishness. We're still only at. Remember that gambler's fallacy tends to make us feel like we're due for something that's worse than it is. 524.61 minus 495.16. Back into 524.61. Check your formulas on your spreadsheet, Michael. If you were lower, that's 5.6%. So what we have seen right now is a consolidation. Boom. 5.6%, a consolidation. If we recover in here and bounce, could that happen? Of course it could. We're in a bull market, right? But could it also recover? Let's back out of that. But could it also recover, stall, and then things look in trouble? Yes. And if that happens, what do I think? I think to myself, I'm willing to put trades on here. Not a lot. I'm willing to put a few bullish trades on my strongest things, knowing that I might have to shut them down for smaller gains here. But if things keep going, I'll be sure glad I got something on. But if this turns over and rolls and this starts to show weakness here, yeah, there's trouble. I'm going to trade to the downside. Now, what kinds of trades? Let's back this out. What kinds of trades make sense if I think this might go up, knowing that I'm in a higher volatility situation? And I think to myself, I want to make money if it gets here, but I also want to make money if it stays in here. How do I do that? Butterflies and broken wing butterflies. Those are the trades that are built for this kind of market. So if I'm going to do bullish, I'm going to do something that has some sustainability to it. I'm going to be ready to go bearish because I now have 3 straight weeks of decline in my market posture. It's not just the score, it's the momentum. We went from here to here to here. We've dropped 3 points over 3 weeks. That's enough for us to say, all right, this isn't just a pullback. This is now a consolidation. It could be a deep consolidation. It could move to correction. A correction, I'm still expecting it to stabilize and bounce. I'm still bullish overall. Right now, if we start to show increased weakness at correction, then I start thinking bear market. And yes, we'll have plenty of opportunity to make money from a 10 to 20% drop. What if we get a bear market that drops 50% like we did in 02, in 08? We have plenty of opportunity. We'll be bearish and we'll stay bearish. We won't get sucked into bear traps. Right? But we're not gonna we don't need to like forecast the weather for next winter. All we care about is the next 2 weeks. Right? What are we doing for the next 2 weeks? We're trying to inform our decisions that start tomorrow. Trading plan is section 1. I want to have discussions. I'm going to move this over. I'm going to take a couple extra minutes. Here we have trading plan discussions. I came in here. Steven's been in here before. A couple people gave me a thumbs up. I'm working on my trading plan with you. I've been like, work on your trading plan, but not doing mine. I'm working on mine. I'm going to be posting comments, aha moments, questions I want to have in our trading plan discussions. Let's have, I don't know, trading plan discussions. If we just want to discuss options, you come in here and you discuss options. Yeah, we have meetups this week. Let's make sure that you're coming to those and participating in those, leveraging each other as strengths. Okay. Remember that up here in the, what is this? All right, I'm on the restart because I have to figure this out. Eventually, I will figure these out. Tomorrow we have a weekly market open. I'm going to try to make sure that this thing is working. We'll figure it out. Okay. Next. What are we working on? We're working on personal info, strengths, weaknesses, commitment and discipline, mission statement, vision statement. This is all about you, all about discipline, all about motivation. This is important. A lot of people are like, oh, why do I need to do that? I'll just be committed. No, got to write it down. It's got to be written. Strengths, weaknesses, real reflective in this. Write it down. We will be working on that together this week. What else? Oh, okay. Sandy or Steven will not be here tomorrow, but why does my microphone keep shutting off? Okay, the bullish trading list. Obviously, our bullishness should be reduced, but there may still be some opportunities. I'm gonna go through the watch list. Well, let's see. Can we go through it real fast together? Let's see how fast we can go. I would go real fast if I could toggle, but my toggle doesn't work. Apple, see, we're not interested. New lows. AIG, that's a maybe. You can see a lot of things have now moved under their 50s. Amazon is still a maybe. It's still trying to hold on, but discretionary not doing well. Earnings coming up. Look at AXP looking strong. There's still some strength maybe in the financials. Still some strength in the industrials. Look at there's Bank of America. Citigroup is trying to move. Caterpillar still looks like it has opportunity. Chipotle, yeah. So I would say financials, there's still some strength. Oil is strong right now. It's our strongest sector. You should absolutely be thinking about oil trades right now, right? Bullish oil trades, and there is volatility in there. Absolutely. So are there candidates? Yes. Now I can't even click. I'm locked. What's going on? Huh. I think the swim is locking up on me. Continue. There we go. Crowd strike under the 50. Be careful with any of these things breaking the 50s, right? Including the Dow. Bitcoin is down. I think GE looks strong still. Let's see what happens as it gets closer to earnings. Right now, here's the thing. If we went back through all of these and we looked at their long-term charts, everything looks fine here. And a small pullback is nothing that other than setting up. That's great opportunity. You would have loved to have gotten bullish back in March of this year. Is that March? Yes. You would have loved to have gotten bullish back in November. You would have loved to, right? So these are great opportunities after these pullbacks on a longer term basis. IWM, small caps, got to be careful. I still like communication services. Microsoft has broken down. You got to be real careful in technology. Nvidia breaking down. Here's industrials. Yeah. I would say there's maybe one or two things that I would be enough to put on a semi-bullish trade. So if we do an alert this week on that is directional bullishly, it will be an option only alert. So if you're a stock trader, yeah, you kind of have to put yourself on the shelf a little bit during these time frames. Options, we can still build things that make sense. There's a good chance that we do some neutral trades. When we get into markets like this, stock trading's a lot harder and options become much more important. And that's the way the alerts are going to come. So just kind of understand that that's what we're looking into this week. Yeah. Okay. So a few things. Let's wrap this thing up. Number one, we're continuing to transition. I will send another email today. Greg's looking for his password. We're going to migrate over to we're gonna migrate over to Discord, and we're all gonna live there and interact and have a magnificent community. Number two, trading plan focus. Really working hard this next 2 months together on our trading plans, because there's a good chance that we have a little bit of a sideways market. Great time to really focus on that. And that's going to be the two most important things that we're doing right now. Make sure you're going into the alert or to the calendar, checking the events. I will continue on my end to figure out why it is that it only plays hold music and won't let me talk unless I restart the thing. I hit every button anyways. So, all right. Well, listen, guys, things have gotten harder. We have felt it. We've seen it. But we're not going to panic, right? We're not going to panic. We're going to relax. We're going to let the market give us information. We're going to use that information to make decisions, and then we're going to go from there. I will see you tomorrow morning. Tomorrow morning, we have weekly market open. Tomorrow evening, we have cocktail hour. Come on. I promise you, you're going to enjoy just kind of relaxing a little bit and just interacting outside of risk, and it'll help you to really embrace what we're doing in this community. It's great to see everybody on Zoom. No, the Zoom, the meetups, all the meetups are only on Discord. This week I will still do the market meetings on both, but cocktail hour, the member interactions in morning and like market open and market close, those are all going to be only on Discord. So you got to get in there to participate in those. It's great to see everybody. Thanks for the extra 7 minutes. I hope you have a wonderful Sunday. It's 50, sunny, and beautiful here in Utah. My daughter's here for gonna go take her to breakfast before she goes back to school for finals. I'm very excited about that. I hope you enjoy your Sunday. I will see you tomorrow morning, bright and early. And as always, happy trading.